personal insurance cover is designed and tailored for individuals to ensure or protect that that ongoing ability for people to earn an income, and the intent being that you provide financial security for your family right through to retirement, regardless of whether you're able to work or not. The key point that I think a lot of people don't realise is everybody insures their possessions as almost routine, but not many people actually adequately protect their own ability to earn an income. Consider how much we earn over our lifetimes. You know, a typical professional earning 90 to 100,000. At age 30, you're looking at an earnings potential of up to $3 or $4 million if you continue working at that level through to age 65. And then when you think about how much you actually spend on an insurance premium compared to the premiums that you would pay to, insure the typical family vehicle, in terms of return, it doesn't really stack up comparing that motor vehicle insurance compared to how cheap life insurance is, for example. So the main things that we're looking to cover when we're looking at personal insurance cover are the four main types of insurance. You're looking at life insurance, which pretty much does what it says on the box. Total and permanent disability cover, which protects against illnesses or injuries that are so severe that you're never able to go back to work again and never able to earn that income for your family. Next on from that is something called trauma, or also known as critical illness insurance, which provides funds in the case that you're diagnosed with a particular disease, but it's not means tested. And when I say that, I mean, it's not about whether you're able to continue working. It gives you a choice when one of those significant medical events happens as to whether you want to return to work straight away or whether you prefer to take some time to recover, to go through treatment, and then make that choice of when you actually want to return to work. And then the final one, and possibly one of the most important types of personal insurance, is income protection, which it provides a monthly benefit in the case that you're temporarily unable to go back to work, whether that be illness or injury, and that can continue paying for a limited time or right through to retirement. Again, just making sure that that ability to earn an income is protected through to age 65 or age 70. And the key point with personal insurance is it's not a set and forget. The level of cover that you take out should change over time as your situation changes. And I'll speak about the different kinds of things that might trigger that in a minute.
Thank you. So what are the typical triggers for a client to consider taking out or changing their current insurance cover?
Yeah, sure. So I'll refer back to the slide that Jono put up earlier with the different stages of wealth, and actually break down those 5 different categories for you in a sec. But I think the key point here is that unless you're actually a self-funded retiree, generally speaking, we would expect that everybody should have some level of cover, whether that be held inside or outside of superannuation, just to protect the family and their own ability to earn the income, as I mentioned. Looking at an early career stage, I think the key triggers there are starting a new job or finishing university and becoming qualified, and then making sure that the regular increases to income that you'll get as you go through employment or possibly changing employment are actually insured properly. Once you move to the homeowner stage, one of the big triggers there is establishing a new mortgage or refinancing the mortgage when you're purchasing a new home. And at the same time, this is often when people are starting or growing a family. And so adding to the family will often trigger a need to have a look at your insurance or review what you already have in place. When you get to the wealth builder stage, I think the key thing there is that you're making sure that your ability to earn income is fully protected. You'll often be earning at a higher level, less expenses. We want to make sure that the income that you're earning, which is building the wealth, is adequately protected. When you get to the pre-retiree stage, often the interaction that we're having with clients there is making sure that we implement an orderly reduction of cover as you approach retirement, making sure that we keep essential cover in place, but anything that is no longer essential or no longer really appropriate for a client is scaled back, allowing you to focus on building retirement wealth. And then finally, at the retiree stage of life, some retirees will need to keep cover continuing. Often that needs to be tailored to specific risks. particularly if you're looking like you're going to retain a mortgage balance after retirement. If you want to make sure your kids or your grandkids are properly protected, for example, looking after education expenses. And then finally, if you've got a particular bequest or legacy that you want to make sure you leave behind in your estate, you may choose to have an insurance policy that actually funds that.
Thank you. So what are some of the current trends clients should be aware of in the life insurance industry?
Yeah, look, Kim, so at the moment, we're seeing a once in a generation shift in insurance policies. It's been occurring over the last 4 years, and it's certainly looking like it's going to continue for the next 4 years. The shift in the industry has resulted in massive premium volatility. A lot of policy definitions have been changed, and really there's a massive requirement that people need to review their existing policies to make sure they're still adequate and appropriate. A lot of insurers have been reporting huge losses, and this has been linked to unexpected claims experiences, and also to a lesser extent, the underperforming bond markets, where they take their insurance premiums they receive and invest those, have a certain expectation that they'll receive investment performance, which just hasn't materialized. What's ended up happening is APRA has come in and actually put an intervention into income protection, for example. The whole idea around this intervention is to improve sustainability. What they've actually done is cancelled some of the features and benefits that we used to recommend for clients, particularly agreed value policies, which were quite often useful for high bonus, high commission, or self-employed clients. They've also gone and changed how we calculate pre-disability income and the amount of time that we can look back at claim as to how we calculate that income. And they're also scaling back some of the benefits and features that we used to recommend for clients because they're not seen as sustainable anymore. The other thing that we've seen is large premium increases, particularly for TPD and income protection, where it's around your ability to work. And those have been quite significant for insurance held inside super, particularly industry super funds. And we've seen some of those increases slip under the radar because often insurance is not up the front in your superannuation statement. It's on page 5, page 7 when you stop really paying attention. The other thing that the government's done is change eligibility for insurance in super, so that some members are actually being exited from their cover automatically without realising that it's happened. And when they think that they're covered, they're not actually when they go to claim.
Thank you. So what is involved in having a client's insurance cover reviewed?
Yeah, Kim, so again, I'll keep harping on this, but due to these shifts that we've seen in the insurance industry, it's never before been as important as it is now to make sure that your existing cover is reviewed. And the value that our clients are receiving when they do the review process is unprecedented. Our review process is complimentary, and we make sure that the process is easy and efficient as possible. We're, of course, liable for our advice, and we make sure we compare the entire market for quality of policy wordings and competitive of price. And then we come back to a client with a detailed summary commenting on their policy versus the market and the appropriateness of the cover for their particular situation. If needed, after that point, we'll then present advice to the client to implement any improvements that we need to make. And then we manage the finalisation of the application, we complete the policies, and then go into an annual review process to ensure that that cover is appropriate going forward. And we make sure that if a client needs to claim, we are their advocates when it comes time to claim.